We'll kind of get into it right now, and then I'll kind of do my speeches and all that stuff, and we'll do a little bit of a Q&A at the end. So we did a study, 2010 to present. Now, full disclosure, 2010 to present, minus kind of what happened this year, has been a one-way bull market. We understand that, okay? The methods that I'm going to share with you significantly outperform your buy and hold during that time. Again, simple is better. Yes, this is a bullish strategy. We are selling a put spread, so it is a bullish strategy. But just by tweaking your strategy a little bit, you can get some really, really impressive results that significantly outperform the overall market. And again, I don't want you to all be super obsessed over the trade we're doing. I want you to be obsessed with the simplicity of it. So what we did, as you can see on the screen, is very simple. In the four major market equity indexes, that is the NASDAQ, QQQ, the Russell IWM, the Dow DIA, and the S&P 500 SPY. Okay, what we did was this. On June 1st, 2010, we sold a 40 delta, 30 delta put credit spread in the monthly expiration cycle closest to 30 days. That's it. So if I'm going to show you the example of what that would look like today in the Qs, again, we sold the 40 delta, 30 delta. We did not care, and we did not even consider what width the spread ended up being. Excuse me, folks, it's my mother. We did not care or consider even the least bit about the width of the spread. All we did was we sold the 40 delta put. We bought the 40 delta put. That's it. Nothing more. Again, don't get obsessed about the trade. Get obsessed about the simplicity. We did it in the monthly expiration cycle closest to 30 days. So if we did that in the Qs today, we'd go to that monthly expiration cycle closest to 30 days. Right now, that's the June expiration. We'd sell the 40 delta put. Right now in the Qs, that would be the Q27. And then we'd buy the 30 delta put. In this case, it would be the 222.5. I'm holding down my control key. I'm clicking on the ask. And now we have a put spread. That is it. I don't care what the strikes are. I don't care what the width is. I don't care what the price is. I care about none of that. All I care about is, did I sell the 40 delta put? And did I buy the 30 delta put? That's all I care about. So we did this starting on June 1st, 2010. On June 1st, 2010. And then what we did was the following. We put in a profit target, and we put in a stop loss. And then we did nothing else. We did nothing else. So what was our profit target? 50% of the maximum profit. So if we sold a put credit spread for $1.28, 50% max profit would be when the value of that spread got to 50%, or in this case, 62 cents. We put in that order. As you can see there, we put in that order immediately like we always do. And then we put a 200% stop loss. So what does that mean? That means when the value of the option has gotten basically 200% larger than what we sold it for. So in this case, we would multiply it by 3. So if the value of this put spread got to 384, we'd go ahead and take it off. That's it. So we put in our profit target order, 50% max profit. We put in our stop loss order for 200%. That is it. We either hit our profit target, we hit our stop loss, and when either of those situations happened, good or bad, we went on and put on another one of these trades. So I want to make this super, super clear, folks. Super, super clear. This is all we did. In order to do this, in the chat box, do you have to look at a chart? Yes or no? Great. So you all said no. In order to do this, folks, do you have to know about Fibonacci? Yes or no in the chat box, folks? Exactly. In order to do this, do you have to know how Apple's earnings were? Yes or no? In order to do this, yes or no, do you have to know what MACD is doing? No. So again, you don't need to look at any of that whatsoever to execute this trade. As long as you can type in the symbol, as long as you can sell the 40 delta call, sell the 40 delta put, buy the 40 delta put, and the monthly expiration cycle closes to 30 days, put in your profit target or put in your stop loss. That is it. You don't need anything in the entire planet other than the ability to put the trade on. So again, I want to make this super clear, folks. It's not about how amazing this trade is. The trade's good. It's not about how amazing the trade is. It's about how simple it is. So that's what we did. And again, if the profit target was hit or the stop loss was hit, either of those two things were going to happen. There's no in between. It's either going to hit that profit or it's going to hit that stop loss, and that's it. And then immediately when one of those two things happen, we go ahead and do this again. And then when that hits a profit target or when that hits a stop, we do it again, and then again, and again, and again, and again, and again, and again. That's it, folks. Now, again, as I mentioned before, going back to June 1st, 2010, of course, we've been in a raging bull market. Hell, we're probably still in a bull market. It's crazy. The Nasdaq's going to hit an all-time high by this week. Who knows? Again, during this period, the Nasdaq up 395%. True. The Russell up 114%. True. SPY up 176%. Dow up 151%. So again, this is a bullish strategy in a very bullish period. But just by doing the trade that we showed, the results are many multiples of the simple buy and hold strategy. Here's what they are. Doing it in the Qs, we have an 84.6% win rate. Doing it in the Russell, 79.6% win rate. In the SPY, 82.3%, and the Dow, 82.8%. Clearly, and yes, folks, this is a bullish strategy in a bull market, but this is very, very, very consistent. Of course, there are losers, as there are with every single trade, and that's fine. But look at the total return compared to just your buy and hold strategy. Doing this with the exact same mechanics we just showed you gives you a 1,582% return in the Qs. Again, yes, it is a bullish strategy in a bull market, but that is a 4 times better result than simple buy and hold the Qs. The Russell, which was the worst performer out of all of this, which still outperformed buy and hold, was only about a 50% increase in terms of result compared to the buy and hold. SPY was about a 300% increase in terms of total return, and DIA was about a 650% better result than just buying and hold the market. That is it, folks. And again, the average percent gain per trade, not per winner, per trade, in the Qs about plus 7%, in IWM about plus 8.4%, in SPY about plus 2.3%, and the Dow plus 4.0%. Again, look at these results. Look at these numbers. Look at these, folks. No chart, no Fibonacci, no news, no election, no MACD, no candlesticks, none of that stuff. And look at these results. High win rates, very high total return, at least when you compare them to just your buy and hold strategy, very high ROI per trade. This is a 7% return per trade. That is pretty damn good. Now, the big question is, okay, Stephen, well, yeah, those numbers are great over the bull market, but the last 6 months have been really, really rocky. Well, ask and you shall receive. Still, over the last 6 months, when we just witnessed one of the worst bear market crashes in the entire history of the stock market. In the Qs, 85% win rate. In IWM, SPY, and DIA, 75% win rates. Total return in the Qs, plus 34% compared to your buy and hold, which was plus 11. In IWM, while it wasn't profitable, it was less of a loser than your simple buy and hold. In SPY, we were up 16% versus your buy and hold, which was down 4%. And in the Dow, we were up 12.6% compared to your buy and hold, which was down about 10%. So again, folks, yeah, even though these results are good over a bull market, which is expected, they were still really good during this hell of a time, folks. So again, I don't want you all to be super obsessed with going out there and just doing this strategy every single day. The reality is this is a great addition to your current tool set. But I want you to be more obsessed with how damn simple this is. In the chat box, folks, give me a yes in the chat box if you can type in QQQ on your platform. Give me a yes if you can do it. Great. Give me a yes in the chat box if you can locate the nearest monthly expiration cycle closest to 30 days. Give me a yes in the chat box if you can do that. Great. Give me a yes in the chat box if you can sell the 40 delta, 30 delta put credit spread. Give me a yes in the chat box if you can do that, folks. Great. Give me a yes in the chat box if you have the ability to put in a 50% profit target, folks. Give me a yes if you have the ability to put in a 200% stop loss, folks. Great. And then finally, give me a yes if you're able to do that over and over and over again. Great. All of you are saying yes to all of these. Thus, no charts, no balance sheet, no Fed, no tweets, no Fibonacci, no candlesticks, none of that. And look at the results. Very, very impressive across the board in terms of win rate. Very, very impressive across the board in terms of total percentage return. Very, very impressive results across the board for total P&L per trade. The reality is any trade that has a positive P&L per trade is a very good trade. And then, of course, while the buy and hold strategies are good, all of these not only outperform the overall market since June 1st, 2010, but they're doing it right now during a hell of a time in the market. All of you can do this, folks, without having to worry about Fibonacci, candlesticks, patterns, RSI, MACD, whatever. All of you can do this absolutely lickety-split. Now, one of the things that I want to mention is this was assuming a fixed contract amount. So what I mean by that is if we started the study doing this with 5 contracts, we ended the study doing this with 5 contracts. So the returns of this size were based off of a fixed number of contracts from start to finish. So it didn't include potentially adding more contracts as your account got larger. So the reality is doing very basic compounding would give you an even higher total return, but we didn't want to kind of overwhelm people with how ridiculously good this strategy was. So we just kept a fixed number because the truth is after you do a couple with 5, the results show that you would have had more money and then you could have added to that, added to that, added to that, like you all saying are just rinse and repeat. So again, folks, you know, as long as you have the permission to do these trades and you have about $500 in your account, you could have done this. In fact, let me go ahead and really quickly run the numbers myself and see the minimum capital requirements you needed to be able to place these trades. Give me one moment here while I kind of run the numbers myself, folks. Do this really quickly. We're going to do that. 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 Just bear with me. This might take about 60 seconds to go ahead and run this study here, folks. So bear with me for one moment on that. We're going to do this. Okay. 1 second here while okay. So in the Qs, all right, so I'll do this in the chat box. So QQQ, the starting amount was so in the Qs, it was $136 was the starting amount. In IWM, it was $419. In SPY, it was $326. And in DIA, it was $236. So those are the starting amounts that that we started on the study. So with the Qs, we did 136 to 2,000, blah, 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 whatever that is. In IWM, it was 419. Actually, no, that's the total return. I messed that up. So in the Qs, that's fine, whatever. It literally doesn't matter at all. It's 419 to 786 profit. In SPY, it was 326, 217, 83 profit. And then if DIA was 236, 2,266 profit. And so those are the actual hard numbers there. Jim, are these numbers with 5 contracts? No, again, these are the most important numbers. So when you're thinking of contracts, so of course, if you did this with 1 contract, Jim, as an example, and you stayed the whole time with 1 contract in the Qs, that would have been the total return. If you did it with 5 contracts to start and finish in the Qs, that would have been the total return. Just, of course, the sheer profit would have been 5x larger. Does that make sense? So again, folks, I'm seeing some questions in the chat box that makes me think that these folks are not paying attention. So I'm going to go through this one more time, and then if not, you'll just have to go ahead and take a look at the replay. Very simple. QQQ. We find the monthly expiration cycle closest to 30 days. We sell the 30 delta, 40 delta put credit spread. We put a 50% profit target and a 200% stop loss, and then we do nothing. You go away. Because many of you, the more time you're in front of the computer, the worse results you're getting. So you F off. I know people don't like when I curse, but you F off. You either hit your profit target or you hit your stop loss. When that happens, you do it again. That's it. So if you're just going to do this in 1 stock, you only have 1 trade going at any given time. That's it. Right, so again, the reality is you can do this and you can spread it out a bunch of different names and you'll probably do really, really well. And the reality is it's probably going to be way simpler for the majority of you out there than the types of trades that you're doing day in and day out. Because again, not everyone falls under this category, but I do think that the more time people spend in front of their monitors, the more crazy decisions and overly complex decisions they end up making, the more indicators they add, yada, yada, yada. So I think, again, I don't want you to be ultra obsessed about, oh my God, these are amazing results. I want you to be obsessed with the fact that this is very possible without having to worry about charts, Fibonacci, tweets, an election, COVID-19, because you're just following these directions. That's it. Just following directions. And that's it, folks. Following directions. That's it, folks. So it's about 5:24 here. I see a lot of questions in the chat box, folks, that we've already answered a few times in this very session, like how do I place a trade? We've already shown you how to do this twice during this trading session. So for those folks that don't know how to place this trade, just go ahead and watch the replay. I'll hang around here for a couple more minutes. Dale, why such a large stop loss? Well, again, the reality is when we have, so I'll do this example. I'll do it on the fly. So these are the results we have with a 200% stop loss. I'm just going to really quickly add in a 100% stop loss, and I'll show you that the results are going to be way worse. Why? Because sometimes these trades need a little bit of time to go ahead and work. They're not always going to work in your favor. I know that's something we talk about like every single day, but just so everyone's clear, folks, the percent return with a 100% stop loss in QQQ is plus 546%. So it's 66% worse with a tighter stop loss. Okay? In IWM, the percent return in IWM with 100% stop loss is 17.5%. That is 90% worse than a 200% stop loss. In SPY, with 100% stop, 276% return. So it's half as good as a 200%. So you guys want to know why we rarely use stop losses, and you want to know why the bigger the stop loss, the better, is because not every single trade works immediately in your favor. And with DIA and 100% stop, it's plus 298. So in the NASDAQ, it's 70% worse result with a tighter stop loss. In IWM, it's 90% worse results with a tighter stop loss. In SPY, it's 50% worse with a tighter stop loss. And with DIA, it's 66% worse with a tighter stop loss. So, I mean, again, you could go ahead and use these tighter stop losses, but you're saying, yes, Stephen, I would like worse results. And again, that might be something for some reason that you're interested in. I don't know. Again, folks, like people who are asking me about should we always manage your winners, you got to pay attention here, folks. 50% profit target, 200% stop loss. All right, so folks ask me about entry point. Like, again, like, folks, what entry point are you talking about? Find the monthly expiration cycle closest to 30 days. Sell the put spread. Put in the profit target, put in the stop loss, and walk away. I don't know, what entry point, folks? It doesn't get more simple. Following the directions, look at the results. Again, many of you, and some of you are not going to like what I'm about to say, but it's true, many of you are going to get way worse results because you're overthinking this stuff. You're getting way over the top complex when clearly, do you need to? No, of course not. Right, so again, like a question, how many months are you going out? Folks, who cares how many months you're going out? You find the closest monthly expiration cycle closest to 30 days. Right now, we have monthly expiration cycles in Qs that expire 23 days or 51 days. The one that expires in 23 days is closest to 30 days. End of discussion. End of discussion. There's no more. I don't understand what other questions would need to be asked for that. Again, my job is to prepare you all to be as successful as possible with your trading. That doesn't mean to be your best friend. That means I have to tell you like it is. A lot of these questions can be answered by just looking at this very screen and following the directions. That is it, folks. Many of you would do much better spending the time doing the trade as opposed to answering all these questions that have absolutely no bearing on what we've covered here today. Again, think about how valuable this is, folks. Think about how valuable this is. Super, super valuable. In the chat box, how long do you think a trade like this would take you? Let me know in the chat box. How long do you think it would take you to do a trade like this? So the largest response I got was 5 minutes. In the chat box, yes or no? Do you need to do anything other than following these directions? Anything other than that? No. So again, I'll show everyone one more time, folks. We type in the symbol. We go to the monthly expiration cycle closest to 30 days. We have a weekly one here. Of course, that wouldn't qualify. We have a weekly one here. Of course, that would not qualify. We have a weekly one here. Of course, that would not qualify. We have a monthly one here. That would qualify. We have a weekly. It would not qualify. We have a quarterly. That would not qualify. We have a weekly. That would not qualify. Then we have another monthly. Which one is 23 or 51? Which one of those is closer to 30? It's 23. Great. We sell the 40 delta put. We buy the 30 delta put. That's it. We put on the trade. We sell it. We put in our profit target order for 50% of max profit. In that situation, the profit target order would be at 64 cents. We put in our stop loss order for a 200% stop loss, 384, and that's it. That is it, folks. And then either this happens or this happens, and then we do it again. So again, many of you out there are shocked at the results that I get. Many of you are just like, oh my God, I can't believe that he is such a good trader. It's because when I look at this, I say, oh my God, I just follow directions. I don't ask a million questions as to why this is the case, how this is the case, you know, how many, like I just follow the directions. So again, I'm not saying everyone go out there and just go all in on this, but these are pretty good results. Again, not only over the last however long, but over the last 6 months. 6 months has been ridiculous. 6 months has been ridiculous. You know, it's been crazy. Bear market, it's nasty. And not only that, not only we're just in a bear market, but the NASDAQ is about to hit a freaking all-time high this week. I mean, really, like, who cares? Like, would it work better on a pullback? Who cares? Yeah, we've gone up, but we had your summer of 2011. We had the flash crash in 2010. We had a lot of rumblings in 2014. We had a big market meltdown in the summer of 2015. At the beginning of 2016, we had a big sell-off. And the fourth quarter of 2018, we had a nasty sell-off, and we just had a really nasty sell-off too. So although we're higher than we were 10 years ago, there have been some dips in there. There have been some sell-offs. But again, folks, like, will this work better in a sell-off? Maybe. Who cares? I mean, who cares? Again, trading is about making the right decisions over and over and over and over again. And all of a sudden you wake up a year from now and you're like, wow, my account balance is way higher than it was a couple of months ago. That's what it's about. Again, some of you out there might say, well, let me go ahead and find the best time to do this. But to me, like, why? It's not going to work every time. It has a really good historical success rate. Follow the directions. Mark, why not wait until full expiration? Great question. So let's go ahead and run the numbers, and let's just see what happens if we just don't have a stop loss, we don't have a profit target, and we just hold until expiration. I'm going to run the numbers right now. What happens with no profit target or stop? We have, how many trades is that? I can't count. 127 trades. We have 99 winners. So 77.9% win rate. How many losers do we have? 28. The total return plus 570%. Buy and hold plus 395. 570 divided by how many trades? 27. Why do we not just let them go forever? Because I want better results. I want more of the right trades. That's why we don't hold these until expiration, because we get better results when we don't. I mean, again, like for the folks who are saying, why not just hold this to expiration? Which of these results would you like? Which one would you rather have? I would rather make 1,500% as opposed to 500%. I'd rather make 7% per trade versus 4.8%. I'd rather have an 84% win rate than 77. That's just me speaking, though. So again, folks, like, I can't do it for you. I can only give you the tools to succeed. This is a ridiculous tool to succeed. And I hope that some of the folks out there start doing as opposed to spinning your wheels. Again, it's my job. It is my job to make sure you are the most prepared possibly to be most successful. So for you folks that are like scratching your head, if you just know how to do this, which 99% of you did, that's it. That's it. And more than likely, folks, more than likely, we will have auto trading for this by the end of the year. Meaning if you have 10K in account, you could say, just do this, and we just do it for you without you even pressing the button. And the ability to auto trade is actually a little bit easier than I thought. So we will definitely have some stuff for this, because to me, again, it doesn't get more simple. And again, like we're talking about the Qs, IWM, DIA, and SPY, so you don't really have to worry about not getting fills on some of this stuff. And we can create logic in auto trading that's like, hey, put it in the mid price. If it doesn't get filled, just move it up by a penny. If that doesn't get filled, just move it up by a penny. So even though, you know, options are not as straightforward as buying stock in terms of automation, we will be able to have rules that say, oh, just move it up by a penny. And in that case, you'll probably get filled anyway. So